everyone, myself Deepa S from the Department of Professional Accounting and Finance, Christu Jayanti University. Today, I'll be taking you all through on a subject called as Costing Methods and Techniques, in which one of the chapter called as Contract Costing. So from this particular unit, let us discuss one of the problem related to contract costing. So let's take up a problem where we have three different contracts which is being presented in front of you. So in this question, there is a firm of contractors who have undertaken three different contracts, one on 1st of April 24 and the other one on 1st of October 24 and the third contract on 1st of January 25. So until 31st of March 2025, the positions are stated here. And there is an adjustment which has 10% depreciation on plant. And the information provided are the contract price, the material which is a debit entry, the wages is a debit item, then the general expenses is a debit item, then you have a plant, value of plant which is a debit entry, and there is a 10% depreciation which is a credit entry in the contract account. Then there is a material on hand which is a credit item, then wages outstanding is a debit item, then work certified is a credit item, then you have cash received used for calculation, and work uncertified is a credit item, and you have general expenses outstanding which is a debit entry. So with this given information, let us see how to prepare a contract account. Now let us start with the first contract. So as I discussed earlier that there are debit entries and credit entries. So the debit items are material, then we have wages, then general expenses, then plant, the value of the plant, then the wages outstanding, and you have general expenses outstanding. So these are the items which need to be recorded on the debit side of the P&L. Similar way, on the credit side of the P&L, you have information such as material on hand, and there is a depreciation on plant. As you had already seen it in the adjustment, there is a depreciation of 10% on the plant. But contract 1 started on 1st of April 2024 and it was ended on 31st of March 2025. So it's a whole 12 months this contract was in the picture. So therefore, the credit item, if you see the plant depreciation, so 20,000 is the value of the plant, 10% is your depreciation, and 12 months. So 12 divided by 12, you get 2,000. Okay, so therefore 20,000 minus 2,000, the plant depreciation is 15,000. Then after this, you have something called as the work in progress. Under that, you have two entries. One is the work certified and the other one is work uncertified. So now with this debit and credit items, if you look into this question, this contract is for more than a year. And let us see what is the difference. Debit side, it is called as a notional profit. There is an 18,000 rupees, which is the balancing figure, which is 18,000. It's called as a notional profit. This contract is for more than a year and there is a profit on the contract. So therefore, you need to check how much will be transferred to the P&L and the balance will be maintained as reserve. So let's now start calculating that. Now let's calculate how much portion of P&L will be transferred in contract 1 and the balance has to be maintained as reserve. So there are two steps of verification that you do and understand whether you need to take up a 2/3 formula or a 1/3 formula. So step number 1 is contract price into 1/3 of it. So you need to see the question as to how much is your contract price, which is 40,000. 1/3 of it is 1,33,333. So if you check how much is your work certified is 2 lakhs. And the 1/3 of the contract price was 1,33,333. So always work certified should be more than 1/3 of the contract price. This is step number 1. And step number 2 is how much is your work certified, which was 2 lakh, and how much is the contract price, which was 4 lakh into 100. So the formula is work certified divided by contract price into 100. This gives you 50%. So anything ranging from 50% to 90%, you can go ahead with 2/3 formula. So that is what you had seen in step number 1, where work certified was more than 1/3 of the contract price. So with this 2-step of verification, you have decided that you can go ahead and calculate with the help of 2/3 formula. So what is the formula? The formula is notional profit into cash received divided by work certified into 2/3. So you had got a notional profit of 18,000 into cash received, which is 1,50,000, and your work certified is 2 lakh. Now apply 2/3 formula, then you will get 9,000 as P&L, and the balance out of 18,000 is another 9,000, which is maintained as reserve. Now let's move on to the second contract. Similar way, in the second contract, which started on 1st of October, and we do have items listed on the debit side, such as your material, your wages, your general expenses. Similar way, you had a plant value of 8,000, and there is a 10% depreciation on plant, which is 8,000, 10%, and the contract started on 1st of October. So from 1st of October till 31st of March, you have 6 months. Okay, so 6 divided by 12. So you get 400. So the balance is 7,600, which is a credit item. And then you have wages outstanding, which is a debit entry, and general expenses outstanding is a debit entry. So these are the debit items. And the credit item, we had only recorded one, which was depreciation, which was 7,600. We have one more, that is material on hand. And apart from these things, we have the work in progress part. Under that, we have work certified, and the second one is work uncertified. So now if you find out the difference, okay, there is in this contract, you have a difference of 3,000 rupees on the credit side. So credit side is treated as a loss. So now what is that you need to understand here is, this contract is for more than a year and there is a loss on the contract. So we don't transfer anything to the P&L. We just keep this 3,000, which is a credit item, which is a loss on the contract, on the P&L itself. Now let us look into the contract 3. Again, on contract 3, that is a third contract, you do have items such as material, wages, general expenses, plant value 6,000. There is a 10% depreciation, as I said. So the value is 6,000. 10% is your depreciation, and this contract started into effect from 1st of January. So January, February, March, only 3 months is there. So 3 divided by 12. So your answer is 150. So the balance on 6,000 is 5,850 is a credit entry. Then again on the debit side, you have wages outstanding, then the general expenses outstanding. So these are the debit items. On the credit side, you have already recorded the plant depreciation, and the other one is material on hand. After which, you need to look at your work in progress. You have work certified and work uncertified. So with this, you can find out the difference. There is a difference on the debit side of the P&L, which is 1,500. So as you know, contract is for more than a year. The debit side 1,500 is the balancing figure, which is treated as a profit. So now, once you derive at a profit, you need to now calculate how much will be your P&L and the balance will be your reserve. Now let us start calculating what is the portion of P&L which need to be transferred out of your notional profit, and the balance has to be maintained as reserve. So again, same way, you need to start with 2 steps of your verification. Step number 1, how much is 1/3 of the contract price? 1/3 of the contract price is 50,000. I told you in contract 1 itself, always work certified should be more than 1/3 of the contract price. So if you look into this problem, how much is your work certified, which is 18,000? Okay, but how much was your 1/3 of the contract price, which is 50,000? There is too much of difference. Anyways, let us go with the second step of verification. The formula is how much is your work certified divided by contract price into 1/3 of it. You can see that there is a huge difference, as I said, that is reflected in the form of a percentage, which is just 12%. So as we know that anything lesser than 25%, we don't transfer anything to the P&L. The full 1,500 can be maintained as reserve. Thank you all so much for patiently listening. Hope this session was valuable.